We might get underway now. So thank you again for joining me. What I've done tonight is basically I'm going to step you through the process of doing your initial testing, getting to the point where we look at our what we call our pilot system and our high performance system. So before we get really stuck into the bulk of the presentation and we start discussing the processes, just to clarify a couple of things first. When we initially do our testing, so as we're going through the steps in the process of testing our market up, or even before that when we're selecting our market, that initial analysis that we do takes the form of identifying a market that we're potentially going to trade. Now, what I typically recommend people do is start with a market that they are potentially familiar with, that they've had some experience with, that they've basically either traded before or have an interest in, and then really from there we develop up an idea of whether there's an opportunity there to potentially use one of the strategies that we have. Now, we know as a group we've got a number of systems and strategies that we can use in the market. So we've got the trend trader, the reversal, the counter trend, we've got a breakout strategy, we've got a cycle strategy. So all of these strategies are designed at some point in the market to be able to take advantage of different market conditions or phases. So the initial analysis needs to be, right, well, if we're looking at a specific market, now I've got wheat here, so I've just brought up a couple of charts on wheat. We've got a 55 tick, we've got a couple of 55 tick charts. We have a 30-minute chart and a daily chart. So what I typically do is my first process when I'm looking at a specific market is the first thing I need to do is make sure that there's enough volume in the market. I need to know that it's not something that's sparsely traded. So I'm looking at kind of the volume levels. I'm looking at the open interest. I'm looking at what the interest in the market. Now you can see here, this is wheat. Obviously, it's early morning, so we haven't really kicked off the US session yet. The volume's down, pretty similar to what natural gas would be at this time. So if we have a look at the natural gas volume, that's pretty low. So you're expecting the volumes to pick up well and truly when the pit session opens. So when I talk about the pit session, once that session opens, then really these markets should come to life and we should get really good volume. We should get up around the 150, 200,000 plus. And with crude, you'll typically see that push up to say between 300, 350, 400,000. But in the overnight session or during the overnight futures session in the US, the volumes are really well down. So this is not really the time of the day that you want to be trading it because the volumes are too thin. Now, having said that, this is part of the initial process we go through. So if you're picking a market, whether it's natural gas or wheat or whatever market you're looking at, you need to start to develop up or build up a market profile about the market you're trading. And that's why Module 7 of the Pro Trader program talks about building up your market profile. So the elements that we want to do when we look at our initial testing is we want to say, right, well, basically we've identified the potential market that we want to look at. So for this practical example, we're looking at wheat. We know that from our initial analysis that it's a US traded market, so basically it's going to be alive and running at around about 9:30, and you'll see as we drill down into this daily price action, you'll see where the movements are. So you're wanting to start to frame up an idea of where does it trade, the CBOT. You want to find out what the contracts are on wheat. Is it a quarterly contract? Is it a monthly contract? You want to find out basically what kind of seasonality is. So what you're doing is you're going through that module 7, which is your market profile module, and you're really starting to answer some of the things like volatility and range. Well, straight away, if we put in our volatility indicator, we can see that the volatility, so if you haven't seen this volatility stochastic before because you're new or you haven't seen a couple of the other presentations, very, very simple tool. You just right click on TradeStation and you'll see there insert analysis technique, and right down the bottom here you'll see that we've got a a volatility standard deviation stochastic. So there it is there. So we've just inserted that onto our chart, and that's giving us an idea of what the volatility is. So we want to see what the ranges of volatility are for wheat, because this is all building up our profile of what this market can potentially do. And part of our process of developing up our system is to say, right, well, have we got a market here that is going to be able to offer us up opportunity? Because that's what it's all about, it's opportunity. And then from there, can we use our strategies, one of potentially 7, to generate profit on this market and do it consistently? So we know that we've got good volatility. There's extremely good volatility up there. You can see there that the stochastic is built on a 80-20 scale, and with the volatility stochastic up around the 80 level, this is high range volatility. So obviously if it was trading down near the 20 mark, you're looking at low range volatility. So this is really primed for a like a trend trader or a breakout trader type strategy. So you can see there. And what's the other thing we notice about this chart straight away when we look at the daily chart? We notice that there are big range days. They are big range bars here. So you've got good range. You've got a massive long bias. So we're seeing a very, very good long bias, and so straight away we know that, all right, this potentially could be a really good market for us to be looking at and trading. And obviously there's a lot of other things we need to do to develop up our market profile. We need to go through our list of questions. We need to find out what markets are closely correlated with wheat, because if we're going to trade wheat and we're potentially trading other commodities, and that's going to be a basket of portfolios, because remember, when we go through and develop up our system to trade in real time, ideally we want to have a multi-system strategy, and I'm going to go through and explain about the multi-system strategy a little bit later on. But ideally we don't just want one system, we want 2 systems or more to buffer our to help reduce our drawdown and increase our maximum profit or our net profit. So we're looking to trade with 2 or more systems, and we do want systems, and we went through this on Tuesday. We want systems that are going to basically reduce our drawdown and increase our net profit. And those systems that are highly correlated with each other, and markets that are highly correlated, are not going to give us that opportunity, are they? We're really looking for systems that are, helping one another out. When one goes into a drawdown, the other one starts to fire. Now, the other thing we need to be mindful of too, and there's 2 things I want to cover off tonight, and they aren't really 2 things that we've talked about a lot, is one is opportunity, so the frequency at which this trades, and the other thing is the win rate. Now, what we typically know is that we want our systems to have a higher reward to risk. Now, when we have a higher reward to risk, we generally find systems that have a higher reward to risk have a lower win rate. Now, there is scope within your system testing to develop systems that have a higher win rate, but what are you going to sacrifice if you have a higher win rate? What's one of the obvious things for us that we're going to sacrifice with a higher win rate? We're potentially going to sacrifice our reward to risk. So we may get to a point where we're trading 1-to-1. Now, if we are trading 1-to-1, then what we need to rely on is that our system is basically going to run and continue to maintain its profit. So that's what we're relying on. We're relying on that our system is going to maintain its profit, and that's okay. But as long as that does occur, because if we find or get to a point where our system doesn't maintain its edge or our percentage win rate, then we're trading 1-to-1 or less, then we can find ourselves going backward in our portfolio management and our system management. But there is an advantage to having a system that is higher frequency trading with a higher win rate and managing it tightly, as in, managing obviously the potential for it to eventually go into a potential drawdown. But that also helps us if we're trading a system like coffee or crude or one of the other ones that has a slightly lower win rate but does deliver good profit, but it doesn't do it every day, or it doesn't do it every couple of days or 3 or 4 days, but then it'll come in with a big winning trade. So that's something to think about, and we'll talk about that a little bit more later. But what I want you to think about when you're looking at your systems is, all right, well, I'm starting off with a system, and when I get to the end of this process, so once I've developed up my system for live trading, or my system for simulated trading, I'm going to be looking at a second system that is uncorrelated, that that will help balance my portfolio out. So getting back to the daily chart. So we've got our daily chart. We know that there's a strong long bias here. You can see that on wheat, it's just taken off. It's almost parabolic there. You've got a high volatility, so we know there's plenty of opportunity. Now the next thing I'll do is I'll say, right, well, wheat on the daily chart looks good, so there looks like there's potential here. So let's go to a 30-minute. And if we go to a 30-minute, this is a way of just drilling down to that next level and saying, right, on a 30-minute chart. Now for those of you who are new and haven't seen the system before, it's very simple dynamic support resistance that we're operating off, and we're really looking for this to support and resistance to either hold, if it does break, offer up an opportunity for us to get into a long trend or a short trend. So without going through the absolute specifics of the strategy, I'm going to talk about basically, because most of us in here understand that the actual how the system trades, so I'll stick to that. So basically what we're looking for here, our next step number 2, is to look at, all right, well, on a 30-minute chart, what is happening on a 30-minute chart? Where are the opportunities happening? We spoke about this a couple of weeks ago. What we want to do is quantify exactly where the opportunities are coming and see if there's a pattern. Now already, if we start kind of blocking this, breaking these down, we can see that there are plenty of opportunities from about 9 o'clock onwards. So you can see even a little bit earlier, you can see that price is starting to get a kick on. But remember that what don't we want to do? What don't we want to do with this market? We don't want to get into this market too early, because we know that, look, yeah, there's great price movement, but there's not a lot of volume. See the volume creeping up, 5,000. We go to, because I like to compare it with natural gas. Now, already, because most of the people in this room, well, not most of the people, but a lot of the people in this room have traded natural gas before. I know Steph has, probably Giovanni, you might have traded natural gas. I know Dave's probably traded natural gas. So there's a few guys in the room who have actually traded natural gas with me before, and you can see that basically the volume here, and we did trade natural gas from about, and we'll just go to a 30-minute chart. We'll go to a 30-minute chart in a minute. We traded natural gas probably from about 8:30 onwards. So the volume is slowly picking up. But if we go back to wheat, and the slippage wasn't too bad early on. It wasn't really bad. But already I can see that the volume on wheat is much better. So if we wait for wheat to kick into its optimal time to trade as far as the US market open, they're in a much better position. So we're starting to get a feel for this, because we know that there's obviously good range of movement after around 9:30. You can see a lot of movement there, from 9:30 onwards. So to me, the first thing that we're going to do, we're going to be testing 9 o'clock onwards, aren't we? We know that the wheat market here is going to shut at 1400. So that's basically around our, that would be the furthest we're going to push this out. And it looks like our optimal time might be, say, 9:30 to 11:30, maybe a 2-hour block. So if we do our initial test on the trend trader, because that's what we're looking at, the trend trader, if we say 9:30 to 11:30, we should get some reasonably good results. So let's have a look at what we've done. So basically, we've identified that we have an opportunity for a market to test up that looks reasonably good as far as range and volume and volatility. We know that there is definitely opportunity there during the day, and we've pinpointed the opportunities. Looks like it's coming around about 9:30 or the morning session. So that at least gives us a really good starting point to do some testing. Now we can go into a lot more detail with our testing, and we can break the testing down on. So how can we do this? We can basically, what we initially do is we're looking to test on time to start off with. So time is the first thing that we want to test, and we want to broaden out the scope of, say, a 2-hour block, and then kind of drill down from there. So if we go to our 55 tick, now I've picked, what I typically do is I start with say a 55 tick, because I know that's probably the lowest you want to go as far as tick charts, because that's, once you start getting any lower than that, you start, particularly if there's a lot of volatility, you're potentially going to open yourself up to some slippage. So you want to be pretty careful about that. So our ranges can typically be 55 tick, you've got the 89 tick, a 144 tick, you've got a 233 tick. Now you can put any combination of tick charts together you want. You can come up with any number. These are general fib numbers, so they tend to work really well as far as specific tick charts, but you might find a variation to that. You might find that the 90 tick chart works really well, or some kind of offset of that. So really there's no hard and fast rule. It comes down to the grunt work, the testing. So what you do is you may have a list of tick charts you're going to run through, and it would be the same as if we were doing the Renko. So if we decided to load this up as a Renko chart, well then we would straight away go, all right, what we're going to do with the Renko is we're going to test, say, a 3, 4, 5, 6, 7, and you go all the way up to a 10 brick Renko. But with the Renko charts, obviously, you need to be very, very precise in the way you test up the Renko, because your stop and your trailing stop, your initial stop and your trailing stop, and we'll go through the filters here in a minute, they absolutely have to be a multiple of the brick size. You cannot stray from that, because the minute you make those a variation of the brick size, then, or an offset of the brick size, then you're basically not getting the most accurate results. So you need to make sure that they are a multiple of the brick. So if you've got for example, if you've got a 5 brick, you're going to want to have a 0 trailing stop, or a 5, or a 10, or something of that value, something that's a multiple of the brick size. Does that all make sense as far as the Renko? So there's a slightly different set of rules for Renko, but that's just to maintain the integrity of this system and the testing you're doing. So we get back to so the next thing we want to do, once we've got, say we're settled on, we're going to initially test on a 55 tick. So then we go to our 55 tick and we open up our, now this same process is what I use for testing up all the strategies that we do. So basically I know that my initial time is going to be 9 to 11. I'll go 9 to 11. Now, so what I want to do is I want to keep my testing fairly robust. I don't want to have any variables in my testing. So when I bring up my initial testing, I'm going to go into my strategy, and I've inserted and I'll just bring another one up. Let me go into this one here. Okay, so I've got the trend trader, the GMT-V2 trend. That's loaded up, and I've actually loaded up a 9 to 11.50, so I've actually added a few minutes on the end there. But let's go in. So we've got our initial setup in there. Now, when I talk about coming up with a pilot system, what basically I mean by a pilot system is, a pilot system, you've probably heard me say this a few times, a pilot system is really just your system that you develop up through this process, this initial system, that is profitable. So something that you can identify that is profitable, that is making money, that is giving you an edge in the market that you can then further develop. So the pilot system really is just your basic settings that you come up with, and you're going to lock down obviously the best time of the day. So your pilot system will basically be what you end up with as far as your initial testing. So once you get through your initial testing and you've come up with a really good time of the day, you've come up with your specific stop that you're going to use. Now 50 ticks is way too much, so I'm going to drop that down to 15 because that's about where I'm going to sit as far as risk. I'm going to basically use I'm going to take you through these settings again. So our time is obviously when this testing starts and when it finishes. So it's going to start at 9 o'clock and finish at 11:50. Now, if you are someone who is identifying systems that set up around the 9 o'clock mark, give or take 10 or 15 minutes, or 5 minutes, or even 3 minutes, the thing with this strategy is that wherever this initial bar prints on support or resistance, that is where the strategy will start. So if your time, say I've picked a time of 9 o'clock, right? And you're looking at this and going, well, my time is 9 o'clock, but why is it that my strategy is going in at, say, my strategy is triggering at 9:05, I should be in that trade. Why am I not getting that trade set up? Well, what's happening with the strategy is logging the potential setup based on support. So whenever that first support or resistance bar prints, that is when the strategy kicks in. So if that bar has printed before 9 o'clock, then it won't take any of this setup at all. Even if it takes 10 minutes before it enters, it's based on when the strategy prints its support bar, not when you enter the trade. So if you weren't sure about that before, we've definitely cleared that one up now. So basically, if you're seeing setups that are appearing at 8:50 and you're thinking you're going to get those at 9 o'clock, you'll need to move your time forward to, say, 8:49, 8:48, just to capture those trades. So for those of you who are wondering about the 9 to 9:10 session, there is definitely there's a good window there, and then once you get a little bit before 9 o'clock, that window starts to drop off. So you've definitely got to play with your settings and work out when do you want to start and finish your session. So as I've said, I've nominated 9 o'clock. So we'll go back to our settings, and that's why it's important to actually do a bit of analysis as far as when you're thinking these markets are breaking, because it may not sound like much, but if you're trying to pick the morning breakout, that couple of minutes either side can make the difference between a really good strategy and a not so good strategy, and some really good results and some poor results. So just a couple of minutes either side could be a big difference. Now as we go through, and as I said, we've opened the time up from a 9 to 11:50, and we can basically break this down into 30-minute increments, and we probably will do this, because we might find that in this 9 to 11:50 there's probably going to be some dead action in here. We might run this simulation over 6 months, and there might be some really crap, a really crap 30-minute time slot or whatever there is that just doesn't provide any profit, so we can filter that out. So again, this 2-brick breakout, that applies to obviously not the first push through, but the second close through of the support or resistance. So that's important because it's making sure that you're getting a clear break of support or resistance. I'm going to change that to false so we get every trade. As I said, I've knocked the stop down. There's no point me testing a 50-point stop if we're not going to trade it, is there? That's just a waste of time. However, if you have TradeStation or multi-charts, you can optimize. So why wouldn't you go out to the maximum stop you're prepared to take, which might be a 30, and you may as well optimize it. So you might look at, say, a 10 to a 30 and run the optimization in increments of 1, and at least then you can see what the optimal stop is based on your settings. So I'm just going to set that at 15, and this preliminary work is what we're doing to set up our pilot system. So we're trying to work out what are the most robust settings for this 6-month period that I can then work at improving. Because I'm not going to, once I get my stop and my time and my target, I'm really not going to do too much. Then I'm going to basically look at, I'm going to break the system down. And this is what we call level 1 pilot system analysis. So the next thing we're going through is the TP, which is our trailing stop. Again, I like the trailing stop, so I'm going to leave that at true, and that's basically taking the trades based on the actual trailing stop. And I'm going to just make that, say, a negative. I like a -2 offset, so I'll just put that in. So I've got support, resistance, trailing stop off, and I've got the swing trailing stop off as well. So I've turned those to false, and I'm going to go for a fixed target. So I've got a trail obviously in there, so I might as well add in the fixed target, and I'm going to add in, say, an 80-point fixed target, just to, if I get some huge running trades, that'll lock in some nice profit, and it gives me a fantastic reward to risk on those. And I've got, you can see here, I've got every single day on, so I'm not doing any filtering there. I'm not filtering based on volume at all, so I'm going to leave that off. You can though, you can obviously run your filters on that. So if you want to test on the volume spike or volume divergence filter, you just turn that to 1 and 1. If you don't want those included in your testing, you just turn it to 0. And just for the exercise, for the purpose of this session, I'm just going through this so we can get a quick look at a test. Now, the momentum filter is based on the MACD and the Bollinger Band. So basically what it's telling us is that, alright, well, we've got the standard MACD settings, 1226, and average length 15, standard deviation length 10. You've got, so these are variable. You can change these if you want, so you could change that to a 14. So I'm going to leave them as they are, and the only thing you can really have control over here is whether you use the momentum filter or not, and then how aggressive you use it. So if you decide that you want to have the momentum filter on, you leave it at true. If you want it off, you turn it to false. And all you're doing there is you're basically you're wanting both the MACD and the Bollinger Bands to be in a momentum phase as far as your indicators. So the Bollinger Bands would be expanding, the MACD would be pushing outside of the Bollinger Bands if you overlaid the two, and that would be giving you a confirmation that you've got momentum in the strategy. Now, if you decide that you don't want to test on that, you just leave it as false. So what we're going to do now, the MACD offset, which is how aggressive you get in, if you leave it at 0, then it's basically going to take the trade more aggressively. If you put it to -1, then it's going to be less aggressive and more conservative setup, and a +1 would be more aggressive, less conservative. So that's basically what we've got. So let's have a look at just this initial test on our strategy and see when we run the performance report how this actually does. So we're going to just run a performance report here, and you can see that initially this looks like it's making money. So this is our pilot system. We just ran it off the basic settings. It looks pretty good. It looks like there's a lot of trades there. So straight away when I look at that, I think, right, well, we've got some work to do on this thing. We need to get these trades down. And if I don't really need to even go to the performance report to know that this average trade net profit is going to be terrible, because we've got over 700 trades in a very short period. So there's a lot of turnover here. It looks like the thing's making money, but if we go to the performance report, I bet you our average trade net profit is around $14, $15, and it is. So it's $14, $15. We've got a pretty good average trade, winning trade, as opposed to our losing trade, but that's the killer there, the $15. So then we say, right, well, what we need to do, because this is still our pilot system, what we need to do now is we need to work out how do we get this thing down to a reasonable number of trades and a reasonable average trade net profit that we can then go through and do some very strong analysis on. So what we need to lock down is maybe we turn one of the other filters on. So we'll just make a recording of this as far as our numbers here. So let's do some analysis quickly and just get out. So at the moment we're at 705 trades, and our average trade net profit is a dismal $15. So that's terrible. So some of you may look at this and go, oh, this thing's making money, but most of you and everyone who's going through the program would know that as soon as we turn this on live, we're not going to make any money because there's not enough fat in that strategy. $15, you'll get chewed up in slippage and that. So that's definitely something that needs to be rectified. So we'll do it now. So we'll go straight into the strategy. We'll format, and we'll just run down this strategy here, and we'll turn this to true, and that will filter out some of our trades. So we'll hit that at true, and we'll see what that does to our overall strategy. And that should knock. Now there's one other thing we can do here, which we'll quickly. So it does a bit. So let's have a look at our trades now. 16 still pretty low. So we really need to do some work. And if you are not cutting down the trades, then maybe we need to look at the time that we're trading. Do we need to? So we'll do that as well. We'll go in here and we'll just add a breakout, the 2-brick breakout, and see what that does to the overall performance. So instead of us taking the trade as soon as price is broken on support or resistance, we'll add a okay, so 1980. So we're not, look, that's better. So we're getting better, aren't we? We're getting better. This still is our pilot system. So really, as I mentioned before, what we've got is still our pilot system. So we are going to end up with, and we can go through and we can change the time. But whatever we end up with as far as our time and our stop and target. So the things that are going to say constant are time, or that can be adjusted are time, stops, and targets. So they're really the things, and our filters. So they're the things that are going to ultimately improve the strategy here. But we're going to have to settle at some point on time, stops, targets, and filters. So that would then become our pilot system. So we've got so we'll do a bit of work on time. We'll do that now. We'll go back into our time analysis, and we may look. How about we just take it to 10 o'clock and see what happens there? What we'll do is we'll break it down into 30-minute increments and see if the profitability is staying within the incremental time allotments. So we've got 10k there from 9 to 11. Okay, so obviously, that first 30 minutes is not bad. It's giving us an average trade net profit of 105.77. So we can already see that the first 30 minutes is worth trading. So then we go into, all right, well, the first 30 minutes is good. So we'll go back into our strategy, and we can say, all right, so now remember that if you change any of these variables, so if you change your time and then go and change your stop and target, you're still going to go back and redo that. So if you are going to run different simulations for your testing, you've got to go back and recalibrate your overall system. So then we'll go in and say, right, well, 9 to 9:30 is okay. Let's run, say, okay, so 9:30 to, yeah, we'll just keep going along. So I just had a mental block then, to 10 o'clock. I think we've got to put in the 0 there before we kick it on. So we'll see what this gives us as far as overall profit and performance. So this should really crank up the trades, because we only had 13 trades in that very, very small period. So we're seeing already that this is where the gold is. So you can see that a lot of trades, 202 trades, 42% better. Our average trade net profit is better. So we're starting to make some inroads there. So that's good. So we've got 2 periods here that, we still need to do some work on that. And we'll go back, and what we'll do here, just quickly, is we'll just see if this makes much of a difference on average trade net profit. Because I'm a little bit concerned that the breakout might be chipping us down on the average trade net profit. And I'll just confirm that assumption. Okay, so no, it's improving it. Alright, so I was wrong. Okay, good. So we'll go back in there and put that to true. So that's helping us in a big way. And we'll also just double check that this is actually, the momentum filter is helping us as well. So remember, our status on that trade was $16, so we'll just go back in there. 25, so okay, that's with the filter. That's with the filter off, so that's actually okay, so that's okay. So we'll go, alright, so we've got 25. So at least we're getting better, and we'll be able to improve that obviously with our next level of testing. So we'll now go to our 10 o'clock to 10:30 time slot, and as you can see, it's just a case of it's not as tedious as the manual testing, as many of you will be going, yes, no more manual testing, but it does require a little bit of work. You've got to work these systems a bit. You need to find out where the sweet spots are, and find out where the dud areas are. So this is telling me straight away that that's not a great time. So 10 o'clock to 10:30, and we can put that down as not a happy time on wheat. So we'll drop that out, because what we've got is let's just have a look at the analysis on this. So we'll close that off, and you'll see that we've got an average trade net profit. So we've lost $15.95 there. We've got 116 trades. So of those 700 odd trades, there's 116 that we can vanish to the bad bin there. So we'll go to our, so we've got I'll try 10:34, because we need that buffer, because remember the US news comes out. There's frequently US news at about 10:30. So we'll go 10:34 to 11 o'clock, because our previous testing was to 11:50. So we'll be able to break this down into and see if there's any value here. Okay, that's showing a bit better, so we've got a better time slot there. So we're going from 10:34 to 11 o'clock, and then we'll just run that last analysis, and that will be basically 11 o'clock. And obviously we don't want to overlap times when we do our proper time slot, so that'll change things a little bit. To 11:30, we'll see if this last bit is okay. Okay, so there's some profit there as well. Average trade net profit at 17. We'll be able to kind of improve on that as well, because you'll ultimately see that there's a really bad imbalance between the longs and shorts. So we're only getting long trades that are making money. So that is not good. Okay, so that's interesting. So if we go back to our strategy and we try that last 20 minutes, just to be spot on. So you can see where I'm heading with this as far as the bias. So we'll just see how this one comes out as well, and you can see that hasn't been fantastic either. So we can probably, what we can do is we can say, right, well, from our testing we can go 9 o'clock to 10:30. Sorry, 9 o'clock to 9 o'clock to 10 o'clock, and then basically 10:34 to 11:30. So that would be they would be our two parameters that we'd test on. So then we can, from that, so we'll load those up, and we would probably, I mean, ideally we want to load in. So we'll set this as a default. We'll go in and we'll go, right, we're going to set it up from 9 o'clock. So this is our first one, 9 till to 10 o'clock, and we'll set this as a default. So that's set as a default, and we'll load the second strategy in so we can get a really good look at it separately. If you're going to put in times, my preference is to split the times up rather than to put the times in the one strategy. So that way it's easy to kind of see how they're performing on their own. So you can see there that's cleaned it up a lot more. There's 220 odd trades. Let's have a look at the average trade net profit. Average trade net profit is up to 29.80, and we haven't really even done. We've just worked out the time here at the moment. That's it. So we've got a pretty good run at the moment. So we'll add our second strategy in, and because we did a format. We formatted the strategy, it makes it a lot easier for us. So we go insert strategy, we add in the trend trader, We go OK, and we can add this in, and we should have, if we go to format, exactly the same. So we're going to change this now from 11 o'clock, 11 o'clock to 11:30. No, we're going to change that from 10:34, aren't we? Because 10:34 to 11:30 was good. Just double check that, and what we'll do is we'll yeah, well that's it, Brett. Brett's come up with a good point. We haven't even done days yet. So this is what we talk about. Now this is basically our pilot system. So if we turn this top one off, because we want to see how this bottom second time slot performs, and we'll go in here. Now that's not too bad. Obviously could be improved, but that's offering profit up. So we've got two times now. We've got 9 till 10 o'clock, and we've got 10:34 to 11:30. So we've got our 2 time slots. We could then potentially improve on stops, improve on targets, and just do one last check on the filters, and that would then come out. Now I'm not going to go through all that because you guys know how to do that. So once you've got your basic times set up, then you just go through and just see if you can get it any better on stops, targets, and filters. So basically, stops are going to be, your standard stops up here. Based on this stop here, that would be a standard stop in your trailing stop. So you might do some customizing on that, and then you would do some testing on your targets, and then you might look at your filters that you've got. So what you're going to come up with basically is you're going to come up with you're going to try to get that. What you want to do is you want to try to get those settings that you finalize up to as close to as $50 as possible. So your goal really is to hit the $50 mark. That's always our goal. And this is what we call, this then becomes our pilot system. So that is our pilot system. That's level 1 analysis, our pilot system. We've basically looked at time, stops, targets, filters. That's our pilot system. Now, we've got a pilot system that ideally is as close to $50 average trade net profit as possibly we can get it. I mean, you might get it up to $34 or $40. It might not be perfect, but that's level 1 analysis. And we've already seen that if we look at this analysis that we've done, we've gone from 700 trades to 368. So we've smashed out a lot of the losing trades. We've got our average trade net profit to $30. So we're looking pretty good at the moment. But we can do better than that. We can do much better than that. What we then do is we go, right, well, that's not bad. And we haven't even looked at stops, targets, or filters yet. We then go, right, well, that's our pilot system. Once we finalise stops, targets, filters, that's our pilot system. And that has to run all the time as far as our analysis. Because our pilot system trades every day based on the pilot system. And we know that if we go into our daily chart, what is the first thing that jumps out at you on this daily chart? Where's the bias at the moment? Tell me from the 18th of June where the bias is on this chart. And where the volatility is as well. So we can already see from looking at that chart that we've got a massive long bias and we have high volatility. So as we're looking at our pilot system, which we're looking at, we know that, all right, well, if I'm trading my pilot system, should I be looking at my days of the week? Could there potentially be, on my pilot system, a day of the week that is not performing well? And I would hazard to guess that there would absolutely be at least 1 or 2 days of the week on this wheat market that would be absolutely fairly poor. So if we go through this and go and look at our days of the week, I'm sure we can take out a couple of bad days. And let's do a very, very quick. We know that at the moment we've got both systems on. We've got a net profit of what's that, 11,000. So let's turn one of the days off. Let's just do a very, very quick go in there and turn, say, or we'll turn all the days off except for Monday, and let's just have a very, very quick look at exactly what happens when we do that to our strategy. So we go in and we turn all the days off. We'll do the same on here, and we'll just see where the money's coming from. Because, and really what we should do, and we will, we should break these time slots up, because could they potentially be offering up different results? So we really want to, because these are different phases of the market, different times of the market, different traders may be coming in. So we definitely want to break that up. So if we do that, we can see that by breaking this strategy up and segregating the times, we can see that Monday's good. Monday's really good. So we'll go to Tuesday. So Monday's a big tick on Monday. So we then go to, we add Tuesday in, we turn Monday off, just so we can isolate Tuesday. So if we've already got our pilot system, what is this? What are we doing now? What are we actually creating now if we're going and looking at our days of the week? So we can see Monday, Tuesday isn't too bad, it's profitable, but it needs to be monitored. What are we actually doing? What's this next phase of analysis that we're doing as far as our system? We spoke about a pilot system and a high performance system. What we're creating here is we're creating the settings for our high performance system. So whatever you well, there's a great day. So Wednesday's good, and we go in, and so we can basically go through every single day of the week and find out which day is a day that we want to exclude from our trading, and we can go in, and this is what we're doing. We're basically creating our high performance system by looking at the days of the week, and then also if we look at this, we can say, right, well that's been good, but what's it? You can see the shorts haven't made any money at all. So that leads us to the next thing we can do. We can look at days of the week, but we can also say, right, well, of Monday, Tuesday, Wednesday, Thursday, Friday on the days of the week, should we be trading longs and shorts, or should we just be trading one or both, or can we turn some of these off? So what you're actually going to end up with when you do this final testing is you're going to end up with a pilot system that trades every single day, and we saw that a minute ago. Then you're going to end up with what we call a high performance system. So the high performance system is exactly that. It's a high performance system that only trades based on the best settings. So it only trades on the best settings that you're offering up. So if you exclude, if you're trading Monday, Tuesday, Wednesday, and Thursday, and basically Friday is out, and you're trading, say, on Monday you're trading longs and shorts, on Tuesday you're trading longs and shorts, on Wednesday you're trading shorts, on Thursday you're trading longs, on Friday you're not trading anything. Basically this becomes your high performance system. So these settings here are now your high performance system. However, we still have to track our pilot system. So when you're setting your desktop up, what you need to do is you need to have, I personally have my daily chart, so I know what's happening with volatility. I know what's happening with where the bias is, because that's one of the big things about obviously keeping track of your system. I need to have my pilot system loaded up, so this would be, I'd have my pilot system loaded up here, so I'd go back in here. I'm turning everything on. So I'm turning this system on, I'm turning this one on as well, and I'm turning all the days of the week on as my pilot system, because I need to really know what is going on with the days of the week that I previously turned off. And if I turn those off and just track my high performance system, I'm never going to know if one of those days is turned around and starting to perform. So what I've basically got is I'm going to have a daily chart my pilot system and my high performance system running. And you'll be familiar, hopefully you will be, with the spreadsheet that we discussed earlier, and I'm going to bring that into the room here once I get a hold of it. It's proving to be a little bit slippery. So you'll be familiar with this. This is what we call our pilot system. Now our pilot system, as we've said before, can everybody see that spreadsheet? Our pilot system has, in fact, and this is when we talk about, all right, well, if you create a great high performance system, it's a really good system, you've taken out all the crap days of the week and you've got rid of the current shorts that are not making any money because there's a massive long bias on wheat, and there's a huge amount of money to be made on the long side at the moment because that's where the bias is, that's where everything seems to be trading. Then once you get your high performance system, every week you should be basically putting data into this spreadsheet or going through this process to make sure that your pilot system is still running properly, or your pilot system's results or configuration has not changed as opposed to your high performance. So what you're doing is every week you're monitoring your high performance system, and you would set an R break or a circuit breaker. It might be a drawdown amount that you come up with, say it might be $1,200 or whatever the multiple of risk is that you turn the system off. So your system is running from a high performance perspective, but every week you're still looking at your Monday, you're looking at and checking your average trade there, you're looking at your Tuesday, you're looking at your longs and your shorts. So you're going through every single day of the week to track exactly how the trades are trading. Because if you don't keep on top of your pilot system, and one of those days turns around and starts to make a lot of money for you, but it's not making money for you because you've ignored it, then you're really kind of ignoring an opportunity that's presenting itself in your system. So one thing I would say though is you need to be careful that you don't. There's two things you need to be careful of. Is that the one-off big trades, these outlying big trades that come up, that only occur very rarely, that might impact on your results, and just the number of trades. Ideally, you want 100 trades in your sample. Now, you won't always have 100 trades, so you've got to temper that with the number of trades you've got. But if you see a day of the week that is trading poorly, then it's not hard to determine whether you should be trading that day or not, because it's fairly clear based on the average trade net profit or the expectancy of your system. However, you still need to go back and revisit it. So for me, my process is, and I'll just go back to the charts here, my process is load up your high performance chart, and that's what you're trading off, and that's what goes into your overall portfolio spreadsheet. So the spreadsheet we spoke about before, that's what is that high performance information that you're tracking daily in your portfolio spreadsheet. That's loaded up to your portfolio spreadsheet, but your pilot system has to be tracked on a weekly basis just to see what's happening with it. Is there a certain day of the week that's running well? Isn't there? And that way, at least you've got a very, very good look at exactly how the system is still running. And ultimately, you're wanting to put forward the best days, and you will pick up when you start looking at your daily chart and your system. You will pick up when this thing goes parabolic like this and starts to rally, and there's a very, very strong long bias. You will see it coming through in you'll potentially see it coming through in your trades anyway. You'll see that the bias will start to shift. So if you're looking for that anyway, when you start looking at your, say for example, you've turned off your longs previously because they weren't doing as well, and then now they're starting to make money, and this is lining up with your daily chart, then it's a very easy transition to say, right, well, it's time to turn the longs on every day because this thing's making money. And if we have a look at the 55 tick, that's exactly what's happening with this thing. The longs are really taken over. So it's just really aligning what we know to be true as far as the daily chart to what's happening on the 55 tick or the 89 or the 144 or the 233 or the 377, depending on what size you do. And the other thing that we can do as well is once we get our pilot system, so our pilot settings, we can then potentially have something that may work on a slightly higher tick chart that is a higher setting based on volatility. So if you're finding that the 55 tick is really just getting stopped out a little bit too much, or the stop's not quite big enough, you may want to push it out to a 89 or a 144 tick just to open things up a little bit to take care of that volatility. And again, we're seeing it happen on crude, on coffee, on crude. So they're things to keep in mind with your pilot system. So having your basic system, but also potentially having a system that trades based on volatility. So, but that would definitely need to be tested up based on conditions that are identical to what you're getting on wheat at the moment, which is high volatility. So you would need to prove up your strategy, you would need to go back and find the settings from a pilot perspective that match this high volatility type environment. Because, and this is a perfect example here, end of October, or say October, or November there, through to almost December. Let's have a look at, so October, November there, high volatility. So if you can match those conditions up with the settings from a high volatility perspective, then you've got at least something that you can transition to from, say, the 55 that might potentially do a lot better. So guys, that's really what I wanted to go through tonight. This is probably going to, well, this is going to be a two-part series, because what I'm going to do on Tuesday is I'm going to basically work on this wheat chart and get it to a high performance system, and I'm going to give you the daily wheat, the 30-minute, and the high performance based on the test settings I've got. And then on Tuesday we're going to go through and we're going to see exactly what I did to get to that high performance phase, what days of the week I left out, and also we're going to load it up into the system performance tracker, and we're actually going to add another market to it to see how it relates in relation to drawdown, net profit, all of the things that we talk about as far as our systems. Because remember, ultimately we're trying here to manage a high performance system. So let me just pull this one up here. This will take a couple of minutes to load up. So what we're going to do now is I'm going to get the wheat chart to the high performance system, and I'm going to show you that basically how to load it into our new system portfolio tracker, which is our new spreadsheet, and it'll come up as wheat. And then what we've got is we'll then have our data for our high performance tracking. So if we turn every system off in here, which we can do over here in our switching, this is our switching mechanism thanks to Giovanni. So guys, just a quick comment to I actually did have the high performance chart fairly well prepped and a lot of this stuff done today, but I did get a virus. So for those of you, I'm not sure if you've had the live updates virus before, but it knocked me out for about 2.5 hours. So it was during my session with Giovanni today, so apologies for that, Giovanni, because it knocked me straight out. But I was able to get one of the guys in to sort it out, so that was great. But one of the things that I was going to mention there is that with the great work Giovanni's done with his spreadsheet is that we can knock out the systems that we don't want. So we can say, right, well, we're going to knock out some of these systems, and we're basically now left with coffee. We've got we'll turn coffee on. So when I load wheat up, I can basically load wheat into this spreadsheet as a high performance system, and I compare wheat and coffee together to see what the overall drawdown is going to be. Because really, ultimately, what we're doing is we're saying, right, well, if I combine my, say, crude and coffee together, then I've got a 1762 drawdown. If I just trade coffee on its own, like we said on Tuesday, my drawdown goes up. So we want two systems that are uncorrelated. And what we'll be doing is we'll be putting our high performance wheat in, and then that will be a system that we'll be tracking going forward. So this is the process that we're going to go through as pro traders, because as you go through this, there'll be times when you need to look and source another market or a system, and you need to go through this an analysis, proving up a strategy, then getting it in simulation, then doing some live simulation, then obviously trading it live in the market. So that's what we're doing now. I'm going to go through this with wheat, and then we'll add wheat to this, and then we can track it. But still, even if we've got our high performance settings, we still need to, on a weekly basis, go back to our pilot system, which we set up, the original raw system, and we still need to check all of the settings here, the Monday, Tuesday, Wednesday, Thursday, Friday, longs and shorts, to make sure that this thing is still running as it should do, or do we have to turn on or off something? Because if we have to make an adjustment, then we need to do that and add that to our strategy, because it's only being tracked in our high performance system. It's easy with our pilot system, because our pilot system is basically just the settings we've loaded up on our strategy performance report all days of the week. Now, our pilot system, if that changes next week and we've got different settings, there's no record of that unless we stick it into our system manager. So once we put it in our portfolio manager here, we've got a record of the optimized settings, and it would be beneficial for you to just keep a track of basically, you might call it week 1, and you might break down. It would be good if I could spell that. Week 1, you might say, right, well, these were your high performance system ran on the following settings, and I know Steph does this, so it might be you might be Monday, Tuesday, Wednesday, Thursday, Friday, and then you look at, say, longs and shorts, and what you're doing is you're just keeping a track of what's on and what's off. So you might have, say, the longs on there, you might have the longs on for a couple of days, and then the shorts on for a couple of days, and everything else is off. And then what happened in week 2? So then when you go back and review your high performance spreadsheet at the end of the year, then you can say, right, well, from my high performance spreadsheet, I actually had a fair few changes during the year. Like my high performance settings changed a fair bit during the year, and I can see exactly how they changed based on the market dynamics. And then it's a good way of just seeing how well that process has worked for you. But that's ultimately where you need to go to as far as you're managing your system. So just to recap, you develop up your high performance system, you've got that running. You still need to go back and keep making sure that your settings are working well, and change whatever you need to change, because ultimately that's what we need to do as traders. So guys, that was a fairly practical look at what we're doing. Do we have any questions before I wrap it up? We've been at it for just over an hour, so I want to make sure that that I answer any questions before we go. Was that all fairly clear? Does anybody want me to kind of go through the pilot system again? Does anybody want any clarification on? Now one thing I have put together is I've put together a document that kind of is going to outline this whole process, because remember too that we've built in things like the system performance tracker, we've developed up the spreadsheets, or Giovanni's done the system manager spreadsheet, or the portfolio manager spreadsheet. We've developed up the pilot system spreadsheet. So these are all things that we're really kind of developing up to help us with this process. So what I'm going to do is I'm going to kind of put all this stuff together in a document that steps out, that takes you through the entire process step by step. So I'm gonna make that available next week for us all, once we've finished the last of the sessions, and basically that'll take you through exactly what we've gone through tonight, but in more detail, and it'll be a document just kind of outlining the steps of what we're doing, and how we're getting to where we need to go. So before I finish up, Words about how the validate strategy for live trading simulated trades spreadsheet. Yeah, okay. So one of the things that you need to do as far as validation. So one of the absolute things you need to do when you validate your system is you need to run it. Firstly, it needs to run in with 20 trades of simulation in a live market. Not live trading, but in your simulated, to make sure that number one, your fills are coming through on the order platform, that that you're not getting any incorrect orders, any errors coming through. So you want to run a 20-day simulation. That's one of the critical things that you do, and that really makes sure that you've got your automation down correctly. Because one of the things that you'll find is that you don't want to make any mistakes with your automation live trading. You want that process to be seamless. So whether you need to set up a VPS or whether you need to just make sure that your order execution is right as far as your automation, all of that your account's turned on, that you get into a process of doing that every day, that you have an alert for your rollover, and I've just put out the on the dashboard, you'll see the automation checklist, so you can customize that. But really getting in that process is important, because what you want to do is you want to log your trades. Strategy produced a certain trade. What did the orders come through on the simulation like? Because if you can't get the simulation right, there's absolutely no point putting any real money into the market. So for those people who say to me, "Oh, look, I should just go straight in and live trade it," well, you've actually got to put the bridge in place of the automation first before you go to live trading. Because it's not like the old days where you would just open your broker account and just start placing orders. Like, obviously, even though the automation is a massive advantage, it's still a process that needs to be managed, and it needs to be managed from setting it up correctly, making sure the orders are executed correctly, making sure there's no downtime, making sure that that the process is happening flawlessly. Then when you've got that under control, then it would be time, if you're comfortable with what you're seeing in your simulated results compared to your live results, and this comes back to looking at your trade distribution, your average trade net profit, your expectancy. If the expectancy is matching with your simulation, with your back testing, then you're looking for, right, well, it's an opportunity for me to go and live into the market. Now, when you go live into the market, you are definitely going to want to go as with a minimal stake as possible. If you've got 100,000, 200,000, whatever amount of cash you've got, you want to go in with one contract, just to make sure that everything's working perfectly. You've got your circuit breaker in place, you've done your testing, you've gone through, you've probably got other markets that you're trading, so you've got a bit of a buffer there. But at some point you have to trade that system live. There has to be some point where you do it. And after those 20 simulated trades, that's the time to do it. You just track to make sure that things are running well. You'll see straight away when you go into the simulation if the system is not performing as it was historically performing. And if you're finding it difficult to manage it as well, then those things will come up in your simulated trial. So that 20 days is very critical there. And then when you've gone live into the market, you have to be ruthless with the strategy. You have to say, right, well, if this isn't performing as it should do, then it's not going to make the grade as far as a tested, validated system. It's got to produce the results that it has done in the testing. If it's not, is it because of slippage? Is it because of the spread on the market? You've got to find out what's going on. One of the things that can really destroy you is if you're, things like latency or with slippage, they can really impact on you, and you've got to make sure that you give yourself every opportunity to get the right fills and to get the right trades away. Because if you're just out, it can really throw your data out, and you might see the strategy set up a good trade, but if you miss it based on slippage, then you've really got an issue there as far as you're trying to get your live trades to match your simulated or your tested trades. So the thing around that is obviously making sure that you've got good data coming through, you've got good internet, you've got you've potentially got a dedicated server set up as well, just to make sure that you've left no stone unturned to make sure that your strategy is performing well. So guys, that hopefully that answers your question, Giovanni. I'll go into more detail on that on Tuesday, but because what we'll do is we'll kind of frame up exactly what we're going to go through with wheat. So wheat'll be our test market. Wheat'll be what we'll kind of test up as our prototype, and we'll take it from a pilot to a high performance. And I'll also come up with, I'll do the same process on natural gas. So I'll be looking at potentially two markets here, natural gas and wheat, because I know you can see volume here at 4481. Let's have a look at wheat. Wheat should have jumped up now to 5.6, so we're getting closer to our US Open time, and we're at least getting some slightly better volume. It's not fantastic, but it's getting slightly better. So we want to see that pick right up. But that's one thing we'll be tracking as well. So for those of you who are looking for obviously new markets to add, there's a couple that we're tracking: Eurobond, wheat, natural gas, and there's probably about 2 or 3 others that I'm going to do some solid testing on as well. So guys, that's it for me. I'm going to be away until Monday, so for those of you who I'll catch up with most of you next week, obviously. So have a super weekend. Any questions before I go? Anything you want me to cover off on before I finish up the session? I have recorded it, so I'll get that rendered and loaded up. But any questions before we wrap up? No. Yeah, well, wheat does look good, Steph. I like the look of wheat. It's got plenty of potential. I had better results before my system went down, so I would say that give me a little bit more time on that one, and I'll be able to come up with something reasonably good, and I'll be able to hopefully come up with something pretty good on natural gas as well. So they're two that I'll be pushing for. Giovanni's done some super work on the Eurobond. The Eurobond now is at the stage where it has to be simulated, which we're doing, and from Monday, and then it needs to be tested live. So the Eurobond, natural gas, and wheat will be pretty much around the same time. There'll be 3 new markets. So thank you very much, guys, for your time. As I said, those 2 spreadsheets are up and available. I'll make sure that third one's up there as well. So your system manager spreadsheet and thanks to Giovanni for his super work on those as well. You've done some fantastic work there on those spreadsheets, Giovanni. And I look forward to chatting with you all soon. So have a fantastic weekend, and all the best. Cheers.